Hello, ladies and gentlemen. Thank you for joining me, and welcome back to Reserved Investments. For those keeping track at home, welcome to part 5 of my 18,000 subscriber Q&A series. Quick spoiler alert, there's most definitely going to be a part 6. There probably will be a part 7, and in all actuality, there's probably going to be a part 8 to this series as well, given how many questions are remaining as part of this Q&A series. So let's dive right in and see how much of a dent we can put in these remaining questions. So here we go. First question. Congratulations on 18,000 subscribers. I'm currently sitting on roughly $37,000 worth of graded vintage Pokemon that my grandfather and I accumulated during the original base set and early 2000s era. Recently, though, I FOMO'd, and for those that don't know what FOMO means, it's fear of missing out, into the modern era and purchased about $7,000 worth of product that I have almost zero connection to. I don't appreciate these newer sets much. Would you advise unloading some of the recent purchases, reevaluating, and reapproaching this from a different angle? What collectibles are you excited about and continuing to invest in currently? All right, I'm going to answer the last question first. I see a lot of opportunity right now in markets that are down. So vintage comic books, graded video games. And I also like coins, currency, and also, believe it or not, vintage Pokemon cards. So those are the markets that I'm currently looking at. Now, to be fair, with all the chaos in the economy, with what's going on with the tariffs and all that nonsense, I have taken a step back because I do want to see where things are going to fall over the next few months. So that is my personal assessment on what I'm analyzing and what I'm thinking about investing in when we talk about diversifying into antiques and collectibles. Now, going back to your main question here, you have $37,000 invested in graded vintage Pokemon cards and products, and you also have another $7,000 worth of modern era products. And you also go on to state that you have almost zero connection to the modern products. I agree with you. I am tremendously attached to vintage Pokemon cards. The modern stuff doesn't really sit well with me. And I'm seeing this a lot in online discussion forums, Pokemon collecting groups, where there's people like me that like the vintage stuff, but not the modern stuff. And then there's other people that are really into the modern stuff and don't like the vintage stuff as much. So it's very interesting how the Pokemon community at present time is somewhat fractured in that regard. Like, I don't really see this in sports cards or even comic books. Most people don't prefer vintage over modern to the point that they're ready to go to battle and they're only investing in one side of the market. So that is fairly unique to the Pokemon collecting community. And I am going to be doing more videos on that phenomenon because I really think it speaks to the investability of these products over the long term. Now, with that being said, what you didn't tell me here is I don't know your age and I don't know your total net worth. Case in point, someone like me. Just going to use this as an example. You state here that you have approximately $44,000 invested in Pokemon products. Well, if you have a net worth of $1 million or even more, that's only 4.4% of your total net worth. So if you're coming to me asking for advice, telling me, Sean, I'm sitting on $1 million when I add up all of my assets and subtract my liabilities, I have money in real estate, financial assets, 401k, other retirement accounts, other antiques and collectibles, and I want to know what to do here, I would tell you, you're pretty much doing okay. It doesn't really matter what happens to this 4.4% of your total portfolio. That said, if you're somebody who is financially struggling, if you're somebody that has a lot of credit card debt, if you're somebody that still owes school loans, car loans, if you own a mortgage, if you have any type of other debts, then this is a concern that you have $44,000 worth of Pokemon products. If you're not financially established, meaning you don't have 6 figures in a brokerage account, in my opinion, this is a major issue that you have $44,000 just sitting in Pokemon cards. I don't know how many times I have to repeat this mantra. If all your money, and I'm not saying this is you, I'm talking in general now. If all your money is invested in assets with no underlying cash flows, this could be gold, silver, antiques, collectibles, cryptocurrency, you are in massive trouble, in my assessment, in my opinion. And a lot of financial advisors would agree with that. So this is what I don't know. Now, if you tell me that you're 30 years old, you have $500,000 to your name, and you have $44,000 in Pokemon products, then I will tell you, okay, you're doing all right. You're only 30. You're doing spectacular if you have a $500,000 net worth at the age of 30. So this is the big unknown. What I would tell you is, are you able to sleep at night knowing that you have $37,000 invested in vintage Pokemon products and another $7,000 sitting in modern era products? If so, the items are stored in a very well secure place where they're not going to get stolen, they're not going to get damaged, you have insurance on the collection, you do you. If you're uncomfortable with this type of allocation, I would honestly tell you to pull back. In my opinion, the reason that you're probably asking this question is because you're not comfortable having this much money tied up in this one collecting category. If that's the case, you're going to have to trim your holdings. I would never ever tell you to sell the entire collection. What I would tell you is, let's say that you're comfortable only with holding $10,000 total in Pokemon products. Then you got to go through the collection and you got to make some tough decisions. And then you should take that $10,000, whether it's vintage product, whether it's some vintage or some modern, and put it in a secure area where it is insured and protected for either the short term or the long term, whatever your plan is here. I usually tell people, before they even invest in any type of antique or collectible, form your exit strategy first. In other words, if you have a clear strategy as to how you want to liquidate a collection, you're less likely to make a mistake in acquiring items that you really don't want or really don't match that vision that you have for that collection. So I hope that advice helps. It really comes down to what you're comfortable with, your overall age, and also your total net worth, assets minus liabilities. If you would have given me that information, I could have steered you differently. But without that information, it really comes down to what you're comfortable with and understanding that, again, if you have $1 million net worth and you have $44,000 in Pokemon cards, that's only 4.4% of your overall net worth. You're going to be fine. You're well under 10% at that particular percentage ratio. If, however, you only have $100,000 to your name, you also have debt out there that's outstanding, and you have $44,000 in Pokemon cards, that's a completely different scenario entirely. So I hope I helped. Next question. Sean, you talk an awful lot about when people should start investing and or speculating in collectibles. My question is, if you were to give general advice, in what order would you recommend people start investing in collectibles? After their bills are paid, after their 401k is matched, or something else? Then, what percentage of your net worth would you put in the speculative collectibles, and where and what would you start with? Okay, this is a multifaceted question. So let me state this. If you're going to start investing seriously in the antiques and collectibles trade, you should already be financially established or on your way to becoming financially established. Meaning you should have a clear plan, a clear financial goal. You should already be developing, putting money into brokerage accounts, 401ks, retirement accounts, and the like. You should not have a lot of debt. Really, in all actuality, it would be preferred if you had no debt. Now, obviously, if you tell me, well, Sean, I have a mortgage, that's something we can work around. I'm acceptable to that. But if you have a lot of credit card debt, if you owe school loans, please do not diversify into the antiques and collectibles trade at present time. You have to work on becoming financially established first. And that should include investing in items with underlying cash flows, meaning you should be putting money religiously into some type of financial plan, whether it's index funds, mutual funds, ETFs, a combination thereof. You should be putting money into assets that have underlying cash flows. Then, when you start to get 6 figures or more, that's when you can start to diversify into the antiques and collectibles trade. Now, on the other end of the spectrum, if let's say that you bring home $7,000 a month, and after all your expenses, you have $1,500 a month left in disposable income, and you're already contributing to a 401k plan, you're paying down the debt, you have a taxable brokerage plan set up where you have regular money or regular contributions going into those plans. If you want to simply speculate on some of these products, like you want to buy some Pokemon cards every month or video games or comic books, whatever it is, you can do that at this point as well. Just as long as you're not going head first in spending like $5,000 on one vintage Pokemon card, or, $4,000 on a vintage comic book, or $3,000 on a vintage toy. As long as you're smart about this, I have no problem if you're speculating or playing in these markets as you are working to become financially established. Now, you go on to state, what percentage of your net worth would you put into speculative collectibles? Well, pretty much all collectibles, even antiques, are speculative in nature. Remember, these items have no underlying cash flows. If you buy an item for $1,000 and you hope to sell it for more, you are operating under the assumption of the greater full theory, meaning there's somebody else out there when you go to sell that item that is going to pay more than what you paid to acquire that item, and that's how you're going to make a profit when you go to sell that item. So, in my case, I have 20 to 30% of my net worth in antiques and collectibles. Now, to be fair, when I say that, a lot of financial advisors scream at me, not understanding my background is in finance, and I've also been in the antiques and collectibles trade since the ripe old age of 12. So I know a lot about these markets. I've made a lot of money in these markets, and I know how these markets work. For you, I would tell you to go slow. It's not a sprint. It's a marathon. Meaning, if you come into this market, you spend all your money, you start bidding up a lot of this stuff, most of those individuals get burned out, and most of them lose over the long term. There's studies I can show you that prove this. Case in point, I don't know if you remember this, when YouTube became a thing, right around 2012, 2013, there were people that were going nuts for vintage video games. And a lot of these people were acquiring a lot of these objects at a rapid pace, and they would start a YouTube channel, and you would see their collections spanning like multiple rooms in some cases. Well, most of those YouTubers got burned out pretty quick, and they ended up selling their collections, and they literally also gave up their YouTube channels over the years. That's an example of extreme burnout. If you come into these markets thinking that you're Rambo or Commando and you're going to bid up all this stuff, you're just going to go in and acquire it, hoard it, and hold on to it, you're probably going to lose. That is not an intelligent approach. So you have to approach this from the perspective of the mindset of an investor, not a collector, not a speculator, someone that's looking at these markets from the perspective of somebody who wants to achieve a profit in said amount of years, whether it's over the short term or over the long term. If you can do that and put together a good financial plan, you're good to go, in my opinion. So that's what the secret is. Remember, I said this before in my previous answer to the person who asked about having close to $44,000 in Pokemon cards. If you really want the secret to investing in these markets, it's to figure out your exit strategy first. Then you will always succeed. As long as you have a plan set up of what you want to acquire and when you want to exit and why you're buying those items, you will do better than any speculator, than any of these starry-eyed Pokemon collectors, great at video game enthusiasts who come to me and say, Sean, you don't understand. It's Mario. Everybody loves Mario. A copy of Super Mario 64, great at Buyouts Games in 9.8, just sold for $1.5 million. That means my copy is worth $1.5 million. No, it doesn't. The person that bought that overpaid, and the market was also overhyped and in a massive speculative frenzy when that item's sold. You need to understand how these markets work compared to other markets out there. And really, there's excellent books that I've already recommended. Read The Psychology of Money, read Killer Stuff and Tons of Money. And you will get an education in not only the antiques and collectibles trade, but also how your mind operates and why you think about money the way that you do. Case in point, I've said this before on this channel. Money is both logical and abstract, and that's what confuses a lot of people. When your net worth starts to grow exponentially, you start to look at money from an abstract point of view. For instance, I'm sure there's a lot of people that are pretty much amazed that when I got asked that question about having $44,000 in Pokemon cards, I brought up, if you have a net worth of $1 million, that's only 4.4% of your net worth. I look at money from the abstract position because I have more money than the average person. I don't mean to brag or sound elitist with that statement. I'm just saying that's the way that I look at things. Other people, if you're struggling to get by and you can barely afford your bare necessities, if you have to come up with just $1,000, that's going to seem like a lot of money. To me, $1,000 is not a lot because I look at money from a different perspective. That's because I'm educated in finance and I know how money moves through our economy and a capitalistic society in general. So I hope that helps answer this. It's all about mindset. It's understanding that these markets work in a certain way that most of the people operating in these markets just don't understand. And that's why I teach collectible finance. That's why I encourage you to read a lot of the books I have in the background of my videos. Case in point, here's an excellent book by Harry Ranker, How to Make the Most of Your Investments in Antiques and Collectibles. This was written in the 1980s, well before the internet era. It is still relevant to this very day. If you already have an education in finance, in business, in economics, this is a college-level textbook. This is collectible investments for the high net worth investor. If you're really in the charts, graphs, understanding formulas, really analyzing these markets, this book will help you. So I hope that helps answer your question. We're going to go on to another question now. So here we go. Sean, which individuals or organizations have the greatest influence over collectible prices? Do auction houses, dealers, or individual investors hold more sway? Well, if we would get in my DeLorean time machine and we would go back to the 1980s and the 1990s, I would tell you it was the individual collectors, and it was, to a lesser extent, the investors that were operating in these markets that had the most sway as to how these markets operated and what direction they went in. Today in the year 2025, I'm sorry to tell you, it is the high-profile auction companies that are pretty much steering the ship, and right behind that are the third-party grading companies. So those are the two entities that pretty much control the antiques and collectibles trade with an iron fist. And unfortunately, the collectors, the speculators, the investors, the Timmies, the Kimmies, and the Poindexters have really no say in how these markets operate. That's why a lot of these top-tier auction companies are trying to get more power. They're trying to buy up their competitors, or they're buying grading companies, or other grading companies are buying other grading companies, and it's forming a monopoly in these markets. And anytime you have a monopoly, you have less competition. Less competition is bad for the individual collector, speculator, or investor. Case in point, if you decide to invest in niche collectibles, the problem that you have is there's very few auction companies that cater to those markets. So if you're attempting to invest, and there are people that do this, in antique or vintage fishing lures, or even at present time, Lionel toy trains, that market is pretty much dying out. There's very few auction companies that are going to be willing to take your items on consignment. As a result, you are at the mercy of their consignment fees. And in certain cases, they can charge whatever they want because they know there really is less competition in that market. That's why you have to think smart about these markets. You have to look long term. 20, 30 years from now, are people still going to be going after the item you are collecting. Because I'm here to tell you, back in the 1980s, back in the 1990s, there were tons of auction companies that catered to collectors of Western toy play sets, Marx play sets, Lionel toy trains, toy vintage robots, items of that nature. Today in the year 2025, there's very few auction companies that cater to those markets. So now if you inherited a collection, or if you have a collection, maybe you're in the baby boomer generation and you want to consign it, you want to sell it, guess what? You are at the mercy of those handful of auction companies that are going to be willing to consign that collection for you. So you got to be smart. You've got to be careful, because it's no longer collectors, speculators, and investors that are steering the ship. It's just like I tell a lot of the Timmies, Kimmies, and Poindexters that come to me, oh, Sean, you don't understand. Everybody loves Pokemon. Yes, right now, there's a lot of people that love Pokemon. You better hope the trend continues, and spoiler alert, it most likely will, because Pokemon is a phenomenal property. But you better hope the trend continues 10, 20, 30, 40 years out if you're holding this stuff for the long term. Next question. Sean, congratulations on 18,000 subscribers. It's just the beginning. I'm looking to invest in graded Pokemon cards, vintage cards to be exact. I was thinking base Charizard, and I was also looking at a first edition Lugia. I'm sorry if I'm saying that wrong, guys. You guys know I'm horrible at name pronunciations. I'm horrible at even pronouncing something like Boba Fett. I know a lot of you cringe when I say these names. Just go with it. It's just the way I am, so I do apologize. I'm thinking no lower than a grade of 8 out of 10. What do you think would be my best option for the long term? Thanks for any help you can give me. Okay, again, I've said this once and I'll say it again. In my opinion, the best sets that have the most opportunity to invest in for vintage Pokemon cards are Gym Challenge, Team Rocket, and also Skyridge. Those are the sets I like. If you're going after the base set cards, first edition holofoil cards, I actually really think that Charizard is overblown and overhyped at present time. From the original base set, from the Shadowless set, I think that there is other opportunity in a lot of these other cards. The problem that you have with vintage Pokemon is a lot of the hardcore investors like myself, we love PSA 10s. So I honestly think if you're going to get these cards, if you can't afford a PSA 10, at least get it in PSA 9. That is your best bet. That is the best advice I can give you here. Just use caution and think smart about this market long term. In my opinion, the vintage stuff over the long term has more investment potential than modern era Pokemon cards. That said, if you're attempting to speculate on modern era factory sealed cards and sets of Pokemon, over the short term, you can do well, because all is what it takes is a moderate spike in price. If you sell into the market, you can make a lot of money in the modern era Pokemon marketplace at present time. The question is, do we think that trend is going to continue long term? In my opinion, it's very risky to say yes. Pokemon will always be a collected property over the next 10 to 20 years. I can guarantee that. It's very popular. It's not going to die out. Contrary to popular belief, Star Wars is still going strong. So if we look at that same trajectory, Pokemon has many good years ahead of it. But what I will tell you, if you're going after a lot of this stuff, you have to invest intelligently. You have to really analyze and study the market. I do like a lot of the vintage cards, but I do prefer, I hate to say this, when we talk about Pokemon and specifically vintage Pokemon, I do like PSA 10s. If you cannot afford a PSA 10, go after a PSA 9. I would not go after any vintage Pokemon cards, with few exceptions, under a PSA 8. So your analysis is spot on when you say, I was thinking no lower than a grade of 8 out of 10. I agree with you. I would honestly encourage you to at least strive to get a 9, if not a 10, if possible. Next question. Sean, I was wondering if you had an idea of how a restored graded comic book affects its value. I can't seem to find a straight answer on it. I have a book graded at 9.6 and it would be worth a couple of grand, but it came back as restored. It just says minor art touch-ups. Thanks for your video. You provide good information. Okay. This is really one of those questions that I love to answer because I see this a lot on the CGC comic forums where a lot of people are asking, how do I value a restored copy of this particular book in question? Now, to be fair to you, you didn't tell me what book this is. What I can tell you, restored books obviously do not have the same value as a book that was never restored. Restored books are seen as less valuable counterparts in most cases. There is no steadfast rule as to how much value a restored book has compared to a book that has never been restored. It is really the luck of the draw, the luck of the market. It is whatever the market will bear. So meaning if you auction off this book, whatever somebody is willing to pay for that object is what you're going to get. Now, I know some of you are going to hate that answer. Some of you are going to cringe at that answer. But what I will tell you is, obviously, if you have a truly scarce golden age book that came back restored, if it still has a lot of value on the secondary market, if it wasn't restored, it's still going to have some value even if it is restored due to the scarcity of that book. Where you get to the problem is when you start getting in to later Silver Age books and even Bronze Age books, if there's any restoration on that book and there's a lot of copies already on the census, that's the kiss of death. So for instance, if you have an Incredible Hulk 181, even if it comes back in 9.6 condition, if it's restored, obviously it's going to sell for significantly less than a non-restored 9.6 condition copy. And honestly, I would tell you, it's probably going to sell lower than what an unrestored 9.2 condition copy is going to go for. Restored books, especially of the late Silver Age era and the Bronze Age, are the kiss of death. They are more acceptable if the book is very scarce and it's a Golden Age book that has a lot of demand on the secondary market. But again, to summarize, there is no clear and fast rule as to what percentage a restored book is valued at compared to its unrestored counterpart. I do know there are people on the CGC forums, on other collecting forums that claim that there should be some type of formula out there that one can use. There is not, because the market looks down upon restored books, especially if it is a book where there's a lot of copies readily available. For instance, I'll use this as an example. Believe it or not, there are some known copies of Amazing Spider-Man 300 out there that have been touched up or restored. Now, if you take a book like that, where there's roughly tens of thousands of copies readily available just on the CGC census alone, that book is going to have significantly less value simply because it was restored. Or if we look at a true Golden Age Detective Comics or Batman key issue that was restored, obviously there's going to be a lot of demand for that book because fewer copies exist. So I hope that helps. We're going to take one last question before we end part 5 of the 18,000 subscriber Q&A series. And this is more about reserve list cards, buyouts, Magic the Gathering, and the like. So here's the question. Hey, Sean, longtime viewer, and congrats on the milestone. I have a silly question for you. Could you explain the dynamics and the impact an individual or group of individuals can have on the secondary market when a mass buyout occurs for a Magic the Gathering reserve list card? Do similar buyouts occur in other markets? The answer is not really. Believe it or not, the buyouts for reserve list cards was pretty much limited to Magic the Gathering. I mean, most people are not going into the market buying like 10 copies of Batman 251 in 9.4 or 9.6 condition. The buyouts that occurred with Magic the Gathering reserve list cards were pretty much dominant in the early years, like right around the time when Alpha Investments, Rudy, came on the scene, like right around 2015, 2016, 2017. You had people go into the market and they would try to buy out a particular card. I always thought that that was completely ridiculous because the amount of capital you would need to be able to actually impact the market for some of these cards was enormous. Even if you're targeting like certain early reserve list cards from Arabian Nights or Antiquities or Unlimited or heaven forbid Alpha or Beta, the amount of money you would need to do it to actually affect the market is a tremendous amount of capital. And there's no guarantee that the market is going to take hold and respond to the fact that there's less supply in the overall market when we look at this particular market in particular. So this is something that really was something that was born out of the reserve list for Magic the Gathering in its entirety. It's not something that really happens in most other markets. And again, you got to understand, this comes back to the idea that, believe it or not, most collectibles are not rare. And those that are truly scarce, like if we look at like an Action Comics 1 or a Detective Comics 27, do you have any idea how much money it would take to buy out every remaining copy of Action Comics 1 or Detective Comics 27 that comes to the market over the next year or two? It would, you'd be looking at over tens of millions of dollars to be able to do that, even in today's market where vintage comic books are trending at all-time lows in certain cases. So this is something that was particularly congruent with Magic the Gathering and specifically the reserve list. I will say that. Even back in the 80s and 90s, antique dealers really didn't try to buy out inventories of antiques and try to, how do I want to say this, manipulate the market in that manner. They did it in other ways. It was always something that was actually frowned upon. Even I know a lot of coin dealers where if they have access to certain collections, if they already have like 2 1881 Carson City Morgan silver dollars in their inventory, unless they get it at a really good price, they'll pass on the third one. No one's really trying to monopolize those markets. So to answer your question in full, this is something that came out of the reserve list in particular. Most other collecting markets are not, how do I want to say this, bothered by individuals that want to buy out all remaining inventory. And if you look at population reports in most cases, especially if we talk rare coins, vintage comic books, graded toys, a lot of these items, it would be very hard to do so. You know, a lot of people that are playing in the Magic the Gathering reserve list market, especially back in the day when Rudy with Alpha Investments came on board, they were of a different breed. They were of a different mindset. There were a lot of finance people that are involved in Magic the Gathering, collecting it, playing it, and also, of course, speculating in it. And that's what really gave rise to those buyouts. People thought, well, these cards are limited. Let's target them. Let's take a set amount of money and see what happens. In certain cases, over the short term, you could make it work. But it's very hard to do it over the long term. And in most cases, when you factor in the opportunity cost and the use of that capital, it's probably not the best use of your funds if you have the ability to do this. So that concludes part 5 of the 18,000 subscriber Q&A series. Let me know your thoughts in the comment section below, and I will see you in another upcoming video.